What does it mean to be a tax resident in Germany? And of course, what is the 183 tax rule in Germany? Today, I'm going to talk with you about this topic. So welcome back to another video here on G-Tax. My name is Roland Elias and I'm a German tax advisor. And yes, it's very important to know the 183-day rule in Germany and the obligations which come with this rule. So let's just dive directly into it. What makes, for example, you a tax resident in Germany? And this is the starting point. If you live in Germany for more than 183 days in a calendar year, then you are a tax resident in Germany. This means, for example, if you have a permanent home, for example, it's in Germany called Wohnsitz in Germany, then you are a tax resident in Germany. For example, as of maintaining your center of vital interests, for example, family, work, and other ties, for example, to soccer teams or something like this in Germany. Then the next thing is the starting of the employment with a German company does not even mean that you are start, for example, with the 183-day rule. It starts if you move to Germany, if you live here. You can work, for example, for a German company, for example, in the US, in Spain, in Italy, or somewhere else, and then you're not a tax resident in Germany. You're only a tax resident in Germany if you live within the borders of the USA. But for example, there are some exemptions like US military stations or something like this. For example, you also have to be registered at the so-called local Einwohnermeldeamt. It's the so-called residence office where this triggers the scrutiny. The next thing is, for example, what happens when you become a tax resident. This is very important because if you're a tax resident in Germany, your whole worldwide income will be taxed in Germany. Yes, that means if you're not just your German earnings or something like this, all the earnings you're from abroad. For example, you have a property, for example, in Spain or Italy, or for example, you have a property or a broker with shares, for example, in the US. Everything gets taxed in Germany. That means you have to declare your foreign income, for example, salary, property, investments, and everything else in Germany. And then the so-called double treaty income, the double income treaties will tell if you have to tax abroad or here in Germany. You are also obligated to do a German tax return if you're about both the free income stages, but they're more later on. For example, the next thing is you're eligible for tax-free allowance or deductions or benefits. Also, you have to pay, in some cases, church tax and solidarity surcharge. One more thing is for you important, and this is for the misconceptions with most of the people get with the 183-day rule. For example, it's not the only rule where you're, for example, taxable in Germany. For example, if you have income coming from Germany, for example, on property, rental income or something like this, then this is also taxable in Germany. There's some specialty we will go on later. The next thing is you don't always get, for example, tax in Germany. For example, if you're here on holidays for short trips or something like this, this is a specialty where they say, okay, you can, for example, be here in Germany for about 1 year. Don't have any income from Germany, get income from abroad, but you're moving from city to city and just making some holidays, then this is not, for example, your tax residency. The next thing is, what if you're not a typical tax resident and what do you have to know about it? For example, if you only pay taxes from sources, German sourced income, that means, for example, local job, rental property, this might go into a so-called limited tax liability. This is called in Germany beschränkte Steuerpflicht. This is a specialty where it says, okay, you have income from Germany, but you're not a taxable person in Germany. This is in this case very important because the full basic allowance of 12,069 euros will not be used on your income. That means the first euro you're earning in Germany, you have to pay taxes on. This can apply, for example, for other instruments like the so-called equal treatment. If you're more than 90% of your income comes from Germany, then you also can be taxed in Germany. This is very important, for example, to stay in or out of the German tax residency. Keep accurate records of all things like arrival, departure, travel days, and something like this. Declare your worldwide income if you're a tax resident in Germany, because they will find it out anyways, because more than 100 states around the globe are sending all their, for example, broker and bank account informations to Germany. Then, for example, review your double taxation agreements, so-called DTAs, from your home country or the country you're getting money from. And, for example, also get legal advice, for example, the tax advisor or something like this, to be on the safe side of the tax law in Germany. Do you have another question? Then keep it up in the comments below. I wish you a very good start in the week.